It was another mixed week for the major markets, as all but the tech-centric Nasdaq managed to close higher. While the Nasdaq ended 1.5 percentage points lower, it had actually been down as much as 3.8% midweek, before climbing higher Thursday and Friday. Not surprisingly, information technology and consumer discretionary stocks were down as a result. However, real estate and utilities were also down, nestled between the two former sectors. Last week was the heaviest week for earnings results, yet the news, whether positive or negative, largely fell on deaf ears. Instead, the economic calendar caught most of the market's attention. Last week's economic reports highlighted a concerning trend of recovery deceleration. Analysts expected that Monday's ISM Manufacturing Index would come in around 65%, a slight increase from the prior month's reading. Instead, the 60.7% result reflected a slight miss. It was a similar story Wednesday when the ISM Services, or ISM NonManufacturing Index, also missed expectations, with a 62.7% reading, below the 64.1% estimate and prior reading of 63.7%. To be clear, the numbers were not significantly negative alone, as any number above 50 reflects expansion. Furthermore, these were some of the highest readings in years. In fact, the ISM Service Index result was the second highest reading on record. However, supply constraints, pent-up demand, and rising prices were aspects that caught analysts' attention beyond the headline numbers. The prices component of April's ISM Manufacturing Report on business highlighted a reading of 89.6%, a 4 percentage point increase from March, and the highest reading since 2008. But it was Friday's BLS employment situation report that truly surprised the market. The April non-farm payroll report was anticipated to come in at around 1 million new jobs, a number that was for the records. But instead, the increase of only 266,000 jobs, along with an uptick in the unemployment rate, gave economists a pause. As it stands currently, April's total non-farm payroll report reflected a reading of 144,308,000 jobs. This is well over 8 million less jobs than in February of 2020, before much of the world implemented restrictions due to the coronavirus. Yet businesses appear to be hiring. The total number of job openings for February of this year outpaces the number of February of last year by 355,000. This sentiment aligns with March's National Federation of Independent Business, or NFIB, Small Business Optimism Index. According to the March report, 42% of owners reported job openings that could not be filled, a record high reading. Owners continue to have difficulty finding qualified workers to fill jobs as they compete with increased unemployment benefits and the pandemic keeping some workers out of the labor force. Not surprisingly, the political fallout of the various economic reports caused the sparks to fly in Washington, D.C., as Democrats and Republicans sparred over the state of federal unemployment benefits and the plan ahead.